Hello, and thank you for joining us today. We are here today at Taylor Insurance Agency in San Antonio, Texas. My name is Susan Nino, and I'm a realtor with Better Homes and Gardens, Winans. And just a little bit about myself for those of you that don't know me. I've been in real estate a handful of years, and I've lived in San Antonio almost 29 years, and I'm a former high school teacher and corporate trainer. And so I approach real estate and working with my clients as being a educator and an advisor, being strategic, breaking down things in a simple manner that you can understand. And today I am here with Rick Chism from TLP Mortgage, and we are going to be talking about mortgages and home loans and so forth because I think Rick and I would both agree that there's way too much noise out there, way too much misinformation, not only on social media, but in in the news, in the regular news. I think sometimes they try to scare us, and
Yeah.
so we're here to try to clear some of that up. We're just going to have fun today. We're going to be having conversation a little bit about Rick. He's been in the mortgage industry for 23 years.
Mhm.
And when I asked him why he chose this career, he said he loves numbers and of course math, which is good because I don't love math. And he also likes problem solving. And that's what a lot of our industry is problem solving, finding solutions. If you know me at all, you know I don't like when I ask a question and someone says I don't know and they leave it at that. That it's okay to say I don't know, but then the next part is, but
Let
I
me go
know who
find
to
out.
call, or yes,
Yeah,
let me go find out and I will get back to you, within the hour, within a day, however long you think it might be. And then of course you get back with them. Actually, and Rick was born in the hot, dry desert of Phoenix.
yes.
Yes,
I
right?
love the dry heat though,
Yeah, okay, he does. And then moved to Austin when he was 7, and he loves the outdoors and specifically the mountains.
for sure.
Yeah.
More of a
And
mountains guy than a beach guy all day long.
okay, see, I'm the opposite. I'm more of a beach person. Although I do like hiking and being outside, but I don't want to camp outside. I want air conditioning.
Same.
Yeah. Yeah, okay. So, again, we're gonna talk today, and I'm gonna be asking Rick some questions. And so let's go ahead and get started. And again, I was mentioning why we both felt this was important to have a conversation about and to share with you all. So we came up with questions that we think you probably have as well. And so let's just get started. But Rick, tell me, why in May of 2026 do you think it's so important more than ever that we have this conversation and we get it out to the public?
Well, first of all, thank you for having me. We're in a crazy market. In the 23 years I've been doing this, lending is as hard as it's been in the underwriting, and a lot of that has to do with the income. A lot more people are self-employed. A lot more people have variable income. And there's so much social media and AI out there that people are looking at and getting information, and a lot of it is accurate, but a lot of it is not accurate. And being in the market that we're in right now, it is very important to seek professional help from your realtors and your lenders of what's going on because we're in a very, very different market right now. Um, it is a market to where, we're in a buyer's market right now. Okay. Everybody knows that, right? Um, but a lot of people don't know that in the consumer world. And what that means, they don't know what that means. What that means is this is time for you to buy and get a chance to buy a home at a lower price than it would be later on. But I don't think that the consumer truly understands what that truly means. So it's important to get with somebody, and talk about the finances and figure out the differences of what goes into a mortgage. What's the difference between a 6% and a 6.5%? Which, listen, an interest rate is very important. You want to get the best interest rate, but the difference between a 6 and a 6.5 is so minimal that it should not stop you from buying a home. So in today's market, there's just a lot of people don't understand how important it is to buy in a buyer's market. And then also get your situation figured out because underwriting is a lot tougher today. So you want to get things figured out, see where you stand, and make sure you do qualify before you go out there and start searching for a home.
Right. Great. And then also too, as I was mentioning, there's so much misinformation out there, right? And I talk to people on a daily basis, and I'm sure Rick does too. Well, my Uncle Buck told me this and this and this, or my
100%.
coworker, silly Linda, who's bought two homes in the last 40 years, she told me this and this and this, and neither one of them are realtors or in the mortgage business. So, um,
Yeah, and to add to that, that's a good point because a lot of people, everybody is different. Okay, every buyer is different, every scenario is different. You cannot compare yourself to anybody, whether it's in this market or any other market. Everybody's situation is different. Whether it's credit score, debt to income, how your profile is being looked at. So it is very important to look at your own situation. It doesn't hurt to ask people, but you have to find out what your situation is and what loan is best for you because what's best for you may not be best for somebody else. And that can be a short term or long term that you're going to be in the property. So there's just several ways to look at it. Very important to worry about your own scenario, your own situation, and not compare to anybody else.
great. Okay. All right. So I'm gonna put my glasses on because I need some assistance. Um, So what is one or two things that a lot of people aren't so clear on when it comes to the mortgage process? Like some people often ask me, "Well, when do I call a lender or when do I get in touch?" But maybe there's something else since this is what you do on a daily basis all day long. Maybe there's something else that people are not sure of. Like, can you break down the process? I know it's not simple, but in a few simple steps.
So it's not simple because again, everybody's situation is different. Okay. My suggestion always is get yourself pre-qualified to make sure you are in good standing right now. Make sure there's no hurdles you have to get over to get yourself in position ready to buy. Okay. It doesn't hurt to do one good qualification to make sure you're good to go. And again, because even if you're buying 6 months out, 9 months out, get something done now so you know exactly where you sit. There's no surprises. Shockingly, you will be surprised that some people with perfect credit, or they think they have perfect credit, will pull credit and they'll have a $75 collection for a medical.
Mm.
And their point, and it'll drop their score 100 points, and they had no idea. So it's always best to
Surprise.
yeah, it's always best to just let's find out. It's a credit pool. Sometimes we can do a soft pool, sometimes a hard pool. If it's a hard pool, it drops your points, a few points. Not the end of the day when you're truly finding out your buying power and making sure that you're in the best position possible when you're going to go put that offer in on a home. So everybody's scenario is a little bit different. But it's definitely best to find out where you are right now, whether you're buying in 30 days or 6 months or 9 months.
All right, great. Great information. And that you mentioned being pre-qualified. I get this question a lot myself as a realtor. What's the difference between someone being pre-qualified versus pre-approved?
So
Is there a difference?
there is a difference. Technically, there is a difference. Pre-qualified is basically me as the lender reviewing the documents, reviewing the application, and saying that they are good to go based on my review. That is a true pre-qualification. The pre-approval typically means that an underwriter has reviewed everything and has given us what they call conditional approval, and we've gotten through the first round of underwriting. That's the true definition of a pre-approval. Um, and I don't see a need to do a lot of pre-approvals, unless there's something wrong in the file. If I send in to my underwriters what we put under a TBD, to make sure that we're not gonna have any issues, that would be a pre-approval on a TBD without a contract. But if I do that, that means there is something in the file concerning me. I have 23 years of doing this, and from 9 years of 100% closing ratio. If I don't have to put the file in that way, then we know it's a good file.
Great. I'm learning a lot too. I love it, which is good. I mean, technically, obviously, I don't have my mortgage license, so I'm not supposed to, share all this and talk to you. That's why I have Rick, right? However, I think it's important that as a team, we know how each other works and what we're both looking for when it comes to helping our clients in the best possible way. Okay, one another question that I am curious about is in May of 2026, which is where we are, what are, because I think maybe it's a little different, but maybe it's also the same. What are you seeing buyers are most nervous about right now?
Well,
Specifically in San Antonio, but I have a feeling it might also be.
yeah, so an analogy I always use is, they always call the realtor first because you're going to show them rainbows and butterflies, the houses they want to see. The lender's always the big bad wolf, right? And so they're always concerned about talking to a lender because we're going to dig into so much of their personal information, and that's just the end of the day. You're asking to borrow hundreds of thousands of dollars. Okay, they're going to dig into you for every little piece of it. But the biggest thing is taking that first step, especially if it's a borrower who's not really sure if they will qualify. They don't want to take that first step to find out. But listen, most lenders out there are easy to work with. I would think, some are probably hard. It is an easy process. I don't talk to somebody harshly. We don't judge your file. We're here to give the facts. And if we can't get you approved right now, set you up to or 6 months, 9 months, 12 months down the road, you can buy. But the biggest thing for everybody is they don't want to take that first step because they're afraid of the unknown and they're afraid of being denied. And so I always just say, get it done because if you do ever want to buy a home, which most people do, you are going to want to know where you stand right now. And if it's a credit issue, start that process now
Mhm.
versus 9 months from now, right?
Right,
So
right.
you just have to, take the bull by the horns, uh, eat the big frog, and just get it done. Get the pre-qualification done. See where you stand, and just work with the lender that's going to, work with you and not make you feel, like you're just in a bad place.
Yes, if you know me at all, you know that I have a saying, and there's some people here nearby who have heard me say this: "Do it scared." So I think that's
Yeah, I
basically
love it. Yeah.
what you were getting at. You might, again, as Rick said, you might be afraid as a potential buyer looking to buy a home. You're afraid to find out. Do it scared. You might be surprised. Let's go and let's do it. Okay, so now we're getting over our fear. We're doing it scared. We're grabbing the bull by its horn. Is that the saying? I
Yeah,
don't
that's
know.
insane.
Sometimes I don't I mix up sayings. People are always talking about it, and you've mentioned a few times credit score, right? What credit score do buyers realistically need in order to buy a home today in 2026?
So every program is going to be different. I think a good baseline I use is if you have a 640 or higher, it's typically there's typically a product out there for you to get approved on. You can go down to 620, 600. There's even investors that go to 580. Of course, the lower you go below 640, the harder it is to get approved. So I use 640 as a baseline because if you're above 640, most cases you can get approved for probably an FHA loan or a BA loan, a conventional loan as well, but it may be harder. I like to use that 640 baseline, but it doesn't mean you can't get approved. I have a client right now has a 589 credit score. We have two of them actually, 589 and a 595, and both of them got approved on an FHA loan. So it is possible. We do have a product for VA that goes down to 500. It's kind of a specialty product, but it is possible. Again, you don't want to put yourself in a box of I have to be over 640. Okay, I'm just using that as a good baseline, but it doesn't mean you can't get approved if you go below that.
Okay. All right. Good. Good information that I can, of course, share with my clients as well.
Yeah, well, like I said, because people get scared going, I have a 580, 590 credit score. Again, let's try. Let's do the application. Let's figure out where you stand and then go from there. Because again, you start now and find out now and start building that process of where to put you in a position to buy a home.
Okay. And then another question that comes up often when I'm talking with people here in the San Antonio community, whether they're current clients or future clients or and so forth, is how much money do buyers need to purchase a house? And of course I know that varies on well, what's the price of the house?
Correct.
Yeah.
So again, different products, every client's different. On average, though, so the VA loan was 0% down. The FHA loan was 3.5% down.
Mhm.
Conventional is going to be 3 to 5% down of the sales price. So in general, it's just different. There's also down payment assistance programs out there to help you if you don't have down payment, but you do not have to have 20% down. And that is something that I do see, and I believe you see this as well, that the consumer thinks I have to have 20% down. And it's actually shocking in today's market that people still think that.
Mhm.
But it is out there. You do not
And
have to have 20% down. There are plenty of programs to help you with the down payment assistance. It's going to have higher fees and higher rates. So, I always tell them nothing is free. It's always best to have your own funds, but if you don't, there are programs out there, especially for first time home buyers. So, at the end of the day, there is no requirement needed. And it's also based on your credit profile. um, you could get a down payment assistance program and not need any funds in the bank really if you set up your structure correct on your offer. However, the lower credit score people, they may ask you to have reserves. So that person may have to have $3 or $4,000 in the bank where the other doesn't. I think a good safe number to put in there is you got to have enough money for your earnest money, enough money for your inspection, and enough money for your appraisal. So I always tell people again, the earnest money is 1% of the offer.
right.
um, you know, $5,000, $7,000 is a good amount to have in the bank to get around those things. Again, that's just a general number, but I do think it's important you have something in the bank. But if you don't, it does not mean you can't apply for a loan and still get approved.
Do something that comes up because a lot of folks that I have in my network know that my husband is a financial person. He's a certified financial planner and wealth and financial advisor. And so, because I don't can't do math in my head, I have special calculators that I use. And my a lot of times I like to talk to people about, well, what monthly mortgage payment are you comfortable with? And I'm sure that's something that you talk about with clients as well. I've named my calculator the front door formula calculator. So it's on my phone and I can just get out my phone and type in the numbers and we can figure out, just initially on some level about what price of home we should be looking at. Now, and sometimes I do this honestly, maybe I shouldn't. You have to tell me if I'm doing it wrong. Sometimes I do that before I send them to you.
I I don't think there's anything wrong with you asking as many questions as possible. So a lot of my realtors tend to send me a client with some good information ahead of time, and I think that's very, very important. All right, so, it's great that you bring that part up. So in my introduction call that I make to people before they apply, I go through a whole process, and one of the final steps I ask them is 2 things. I assume that you're probably seeing houses online. What price range are you looking at? And then I ask, "Okay, now I want you to tell me what payment you're comfortable with and what payment, if I loved a home, would you go to?" Okay. I ask these things because I can tell you in this market, they never match up. 90% of the time, I've got people looking at $450,000 houses wanting a $2,200 payment. A lot of it has to do is we're in a different market. We're in a market of 6 to 7% rates, and they've talked to some people that were at 2 to 3% rates. Okay. So we always, always ask that question of where are you looking? And let's be realistic about the payment because we never want to put somebody in a bad position financially,
Right,
and
right.
overspending on a home. At the end of the day, it's the client's, prerogative to increase or max out their debt to income if they want. But we always like to educate them. We're not here just to do a loan for them. Educate them where they are on their debt to income and make sure that before they make any offers, we run numbers on that house so they know pretty much what they're stepping into. Because like you said, it's very important to know and let them know what they're getting into when they go to buy a home.
Yes, exactly. In fact, before we got started today, we were talking, and I was talking to Kevin Taylor here at Taylor Insurance, and I was telling him how our first home was supposed to be a 7, 8 year kind of home, but we ended up living there 18 years because the mortgage payment was so phenomenal. It allowed us to travel and give more money back to the community and to our church and to charity. So, and like you and I have talked about before, and we've mentioned today that everyone's different. Like what's important to Susan might not be as important to Rick or
Correct.
to Kevin or to, Linda or whoever. So let's move into then since we're talking about interest rates because interest rates, that's a big word the last
Yeah,
few years,
it
right?
is. It's the
So
base.
it shouldn't be. I agree. It shouldn't be. So what do you say to people who or what should we all be responding? How should we respond when someone says, "I'm waiting till the rates get lower"?
So, I mean, I tell people this all the time. Economics 101 is simple as supply and demand. Okay. So, right now, we have a lot of houses on the market. We have less buyers, mainly because the rates are higher and everybody's waiting for the rates to come down. But those of us that experienced, 4 or 5 years ago when the rates dropped to 2 to 3%, there were 20, 30, 40 offers going on every home. Okay. So, that's a massive demand. So, basically, in a nutshell, if the market rate right now, let's just say is 6.5 for a $300,000 home. When the rates drop to 5 or 5.5, whatever that number is going to be at some point, that $300,000 house is now going to probably be, I don't know, 320. I'm not a realtor, but probably going to jump up to about 320 because instead of having 3 to 5 buyers on it, now they're going to have 15 to 20. And we're going to be back in that whole thing of everybody overbidding on it. Not that, again, interest rates are important. You want to find the best rate. But the lowest rate isn't also best for every client. I have a lot of clients that will call me saying, I want this rate. When I explain to them the cost of certain rates, most of them will take the higher rate with less cost because they are not going to stay in the home that long, or they know that they can refinance in a year or two. But, you know, in this market, it is important to buy that house at its lowest price. Like right now, like we keep saying, it is a buyer's market right now. There's nobody in the industry that can say that it's not. And when the rates do drop, it'll probably my guess is, again, I'm not I can't tell the future, but I've done this for 23 years. My guess is when it drops, we're gonna see a pretty quick shift that it goes from a buyer's market to a seller's market, which basically means you'll pay more for the home and you're not gonna get seller's concessions for the closing costs. So where that 6.5 versus a 5.5, let's say it's costing you an extra $200 a month, that's $2,400 a year. Okay, $2,400 a year, but now you're paying $20,000, $30,000 more for the home. It's not hard to do that math. So it's very
I can even
important.
do that math.
Yeah, there you go. So it's important that, the public understands that. And again, you've got to talk to a real estate professional and a lender and a team that can explain all this to you because we're not just trying to tell you guys this to go and buy a home. These are the mathematics of it, right? I mean, if it costs you $2,400 a year more in your payment, and let's say it takes 2 years before the market comes back down. That's $4,800. But again, that house went 300 to 320. I can promise you, it's going to jump up pretty quick when it does if the rates drop like they did before. So it's just important to get in on a market where it is a buyer's market. Again, interest rates mean something, but technically, I mean, we're putting too much weight into that versus get into your home and we can always refinance you later.
I blame the some of the media and social media for that. Like I think they try to try to scare consumers. Okay, so I know Rick said he can't see into the future. And I failed to bring I do have a crystal ball at home. And it's yeah, but I forgot to bring it. But I do have a crystal ball. And I what I sometimes tell people is, look, we could all live to be 300 years old. And I don't think we're ever gonna see rates at 3.5 or 3% ever
No.
again. I mean, I can't predict, but again, my crystal ball, that's what my crystal ball tells me. So, and then the other thing is, as a buyer, and Rick mentioned this, when rates come down and there are more buyers in the market, in fact, I don't have the exact stat memorized. So I shouldn't say it, but I think it's something, and I don't know if you know this, but I remember researching and looking a few months ago for every like 0.5% or what maybe 1% that the rate comes down, there's like a million more buyers enter the market. And if you
That's
have
it.
multiple offers and you really want that house, as you mentioned, you have to pay more. Why? Why wait? Okay. Do it
Yeah.
scared. No, I'm
I
just
can
kidding.
see
But
that being
yeah,
a nationwide number for sure.
a nationwide
Yeah,
effort.
I could
Right.
probably I could see a stat like that.
Right.
Because like I said, we're 2, 3 to 5 offers on homes these days in the market we're in. And
Yes.
there's a ton of people on the sidelines that are waiting to get into the market,
Mm,
but they've been waiting for 3 or 4 years.
right.
We're seeing applications tick up every month right now because some people are just like, "You know what? It is what it is." But we're also doing it better because of social media, getting out there and educating the public on, "Look, the numbers don't mean this much." I mean, I kid you not, when I tell somebody the payment at this rate and this rate, they're like, "That's it?" Or if I put down an extra $10,000, they think it's gonna drop their payment hundreds of dollars. It doesn't. Keep your money, invest it, do whatever, put it into savings for a rainy day, but there's the numbers are just completely different when you sit with the lender and break everything down. So don't try to do it on your own. Don't go online and try to do it on your own. Do a little research, that's fine, but you need to talk to a lending professional, to really dial into your number.
Absolutely. Absolutely. Okay. I have a few more questions.
Okay.
Okay. And thank you for being here today, Rick. Really
Absolutely. Thank you for
appreciate
having me.
it.
This is I love talking about mortgage. Educating the public is big because, like I said, there's a lot of myths. There's a lot of misinformation that's going out there right now,
Mhm.
and a lot of it are scare tactics. But everybody deserves to be in a home, and it'll make you just feel like you've truly accomplished something when you get into that home. And there's just several ways to do it that people just don't understand. And real quick on that, the
Yeah.
different products. People say, I'm self-employed. I don't have enough income. There is a product for everybody out there, and we have every single product. Okay. Even as much as a bridge loan to sell your home. I can't buy a home because I can't sell my home. We have a product for that. Okay. Um, Self-employed people, down payment assistance, um, credit scores that are low. We have all that out there. And, whether it's me or somebody else they work with, those programs are out there. The best advice I can give somebody is do not take no for an answer from one person, probably not even two. If you get told three no's, it's probably a no. But, I know there's clients that will go to a bank, let's say, and they get turned down and they just are so humiliated. They don't want to go talk to somebody else. Do not go and do that. Get you a few no's and then go down that road. But there's a lot of products out there that are for a lot of different people, and you just have to take that step to find it.
All right. And even though Rick is the licensed mortgage loan officer, I want to push whether you're here in San Antonio or anywhere in the world or in the country, please use a local lender.
Yeah.
I cannot stress that enough. They know the market, they know the area, and then that just leads, which is also why you want to use a local realtor when you're house hunting, right? And so forth. So Rick mentioned a few times about being a buyer's market. Well, what does that mean? Well, he did say that there's more homes on the market. So I just wanted to share a few stats with you all. This is as of last night, May 25th. Here in our San Antonio MLS, which is our multiple listing services, we have 17,500 listings
Wow.
currently. We have 5.5 months of inventory. So, as Rick was talking about, that when interest rates do go down, um, there's going to be more competition. And then also, too, you lose out on negotiation power.
Mhm.
So,
100%.
so many people are winning their dream homes or the homes that they have found and that they love because there's only maybe another offer, but there's not 20. And then they are able to negotiate with the sellers, maybe on closing costs, maybe repairs, maybe your realtor, Susan, could even negotiate a rate buy down for you. So this is the time really where you want to visit with me and Rick, and we can strategize together so that you don't have to wait and then in the end up paying more or not winning the home because you didn't have enough money or Um,
Well,
and
competing gets the more buyers. I mean,
yeah,
at the end of the day,
yeah, at the
the
end of the
minute we
day.
start seeing 10 or more offers on a home, the average person in San Antonio does not have the capital to fight that. Back like when everybody was moving here from California, other
Mhm,
states, right?
mhm,
They
mhm.
were coming in making big offers with cash, or cash over the offering price. So, um, to keep us a strong, healthy market for San Antonio people, we just, this is the time to do it. This is the buyer's market. Get out there and take that first step, and see if you can get qualified to buy a home in this market.
Absolutely, absolutely. Okay, I have one more question.
Okay.
We have time. Um, so as we wrap up our conversation today, what is the first step someone watching should take if they simply just want information and they want to start the process of buying a what's
Well, so as we mentioned earlier, a lot of people will talk to realtors first. Okay. So find you a good realtor, and let them introduce you to a few people that you can talk to, and just have conversations at first. Um, and then if that leads to an application, go from there. But the only way to truly find out where you stand today is to talk to a mortgage professional and eventually do an application and see where you stand. That is the only true way. Everybody looks at like Credit Karma, Experian, their credit card app. None of those are accurate unless you just happen to have perfect credit. If you have perfect credit, probably a pretty accurate number. If there's anything off from that credit profile, from collections to uh, high balances on credit cards, anything can throw that number off. So if you're seeing you have a 680 on Credit Karma, and we go pull it for a mortgage, next thing you know, you're at a 620. It's frustrating. But so what you're seeing online doesn't always match up to what we're going to see on a mortgage pool. Okay. So it's best to find out, do a mortgage pool, see exactly where you sit right now. Okay. If you're going to shop in the market, get approved from one person. Okay. I prefer my people not to shop me, but again, I understand you're looking for the best deal. Get approved. You don't have to go shop everybody at that one time. Get approved, and let's find out if you're qualified, and then you can go down the road and go from there. But you have to take the first step. I know it's scary. Um, you know, every market in the state of Texas, from Dallas to San Antonio to Austin and Houston. Okay. Different credit profiles as you go through those cities. Okay. San Antonio happens to have the lower of of the four big cities. That's okay. It doesn't mean you can't qualify for a home, but you've got to get out there and find out where you stand. Do you qualify for down payment assistance? Okay. Do you qualify for a conventional loan, an FHA loan, a USDA loan? So there's only one way to find out, and that's stepping into the process, talking to a realtor to get you to somebody they trust and they work with on the lending side, and then go from there.
Very good. And of course, the real estate agent that you should call is myself, Susan Nino.
Absolutely.
And just to give you my number, it's 210-861-0321. And again, I'm with Better Homes and Gardens Winans. Yes, Better Homes and Gardens magazine, 104-year-old magazine. My brokerage franchise has been around for over 40 years, and we're out of Dallas. And I'd like to thank Rick Chism with TLP Mortgage for being here today. It's been a real blessing. We work very closely together. We are in constant communication.
Yep.
And so, Rick, if you could share your phone number with the viewers.
Yeah, my cell phone is 210-630-1550. Best way to contact me is shoot me a text message, and I'll respond fairly quickly to that. But thank you for having me for this. It's always you get nobody likes getting in front of a camera. So I enjoy doing this. I love talking about mortgages. We truly just want to help the public understand what's out there. Don't be fearful of it. Step out there, take the chance. Everybody deserves to be in a home, and as long as you have a good team working behind you, like Susan and I, then we'll guide you through the process. Whether you buy now or buy 12 months from now, we'll set you up for success. But you have to take that first step, and making sure that you're in a position to buy.
And I do have one last thing to say because Rick mentioned team. I have a great team at my brokerage, phenomenal resources, some phenomenal support. and Rick has a great team too.
Absolutely.
And so that's really what it takes. And then, of course, our team with Kevin Taylor, who is hosting us here at his
Absolutely.
podcast studio at
Many of my clients use Kevin for a lot of their insurance.
yeah, at Taylor Insurance Agency here in San Antonio. So, if anyone has any questions, you're welcome to reach out to either Rick or myself. And go Spurs, go!